What's up, crypto gang? Welcome back to another episode. If you guys are new here, we do a giveaway at the beginning of every single episode, and today's winner is Ram. Thanks so much for commenting on the previous video. Ram just sent you some crypto. On this episode, I sit down with the legendary Richard Hart for about an hour. We talk about some of the crypto economics around his new project, Hex. I talked a little bit about Grow Your Base. We talked just about crypto in general, how he got into Bitcoin through gaming and through throttling GPUs for mining. And it was a lot of fun sitting down and talking to him about so many different topics. So without further ado, let's dive right into this massive stream with Richard Hart. This is the legendary Richard Hart. You could do like a quick intro, Richard.
Sure.
That'd be awesome.
Hey everybody, I'm Richard Hart. I've got about 100,000 followers across Twitter and YouTube. I'm Richard Hart Win on Twitter. I'm Richard Hart on YouTube. I'm a retired serial entrepreneur, retired in 2003. I started from my own front yard a bunch of businesses, and then they ended up with about 150 employees in an internet marketing company. I started mining Bitcoin the first quarter of 2011. I used to mine full blocks on my own with no pool. And there were 50 BTC block rewards back then. So that was good fun. I bought heavy on the 30K top, or the $30 top, and then watched it go down to a penny. That was good fun. And then I came out public to defend my Bitcoin bag because Ethereum was overtaking the market cap of Bitcoin in its future supply. If you account for the fact that it issues at a higher rate for longer, it's like year 2050 market cap was higher than Bitcoin's. And I didn't own any of it. So I came out to say bad things about Ethereum and good things about Bitcoin. And then I learned over time that in fact, there's a lot of good things going on in that ecosystem. And most of the problems that were had because people weren't using it properly. So now I say a lot of good things about Ethereum, and I'm very realistic about Bitcoin. And it's funny, in crypto, whatever you bought is a world-changing invention. And whatever you didn't buy is a scam. And that's how everyone in crypto feels. And it's funny because, maybe usually they're right. Maybe most things are done by the wrong people at the wrong time with the wrong incentive structure. They never get product market fit. They just burn everyone's money. That's what ICOs did for the most part. But the word gets abused a little bit, because if you build open source software that people can use or not, what more do you want? That's as good and as honest and as free and as good as a thing could possibly be. And that's what Vitalik did. And, he's still building open source software that people enjoy and use, and still doing research and still standing on stage and trying to spread the good word. And everyone calls him a scammer. So if you think Monero is a scam and you think Vitalik's a scam, and you think every possible thing is a scam except what you bought, you're probably an asshole, truthfully, right? You're not being honest. You're not being fair. You're not analyzing things on their merits. And your reward for being that way is you will miss out on the multiple thousands of % of return that people will get when they get in on the right project that isn't on the top 10 market cap and then finds its way up there, right? So, talking all that garbage and staying ignorant and priding yourself on your ignorance, you will be forever regretful that you missed the next big thing, because you didn't think there would be a next big thing, because you didn't understand how those other guys got up there, right? So, I ask people, I'm like, how many coins in the top 10 do you think belong there? 2, 1. I'm like, all right, stay ignorant, bro. I can't help you. You're not helping build a better future, right? If you're not doing competitive analysis and you're not thinking about what's missing and what you can do better and really trying things and iterating. If you're not iterating, you're not making progress, right? So yeah. Bitcoin's got less on-chain transactions than it did in 2017, less people that accept it. The price dropped 85%. And these people think that they have the best thing in the entire world and nothing else can be done better. And you're like, well, guys, the metrics, the measurements, the Google search volume, the on-chain transaction volume, the number of new wallets, you're not winning the war. All you have is a really high hash rate. The software is the best it's ever been, right? That's continued to improve. And you have a really high hash rate. And what does that really high hash rate do? Well, you have all-time high difficulty at 3 times less than all-time high price. So that's more selling pressure. People have to sell more of the percentage of coins they get to pay their electric bills. So it just pushes the price down harder. So is that better, right? And all the problems we've had with attacks in Bitcoin have not come from hash rate ever. They've come from software bugs. And there's no bug bounty program, and there's no one auditing the software. So the things that I tell these people to do to improve their thing that I also own a huge bag of, they just don't listen. They're like, no, I can't listen. I can't learn. I can't do anything better. I have my bag and I hope everything works out good. Stupid people. They don't deserve greatness. They don't deserve excellence. It's sad.
So, in terms of the project that you're working on right now, I did some research on it, and I like the concept of creating a CD. I think that that's really smart because that was created in like the 60s, and it worked out really well for banks to give people liquidity and give themselves liquidity and just raise a ton of money to help their infrastructure. So, interestingly enough, in terms of where Hex is based, because it's called Hex.win or just Hex, and it's based on Ethereum, and it'll be taking a screenshot of people that own Bitcoin, so that it'll basically provide them with a CD for their bag of Bitcoin, right? Is that how it's kind of being
pretty
structured?
much? So basically, the two most popular products at your bank are savings accounts and time deposits. And I would say checking account used to be on there, but no one uses checks anymore. So I would say this is the second most popular product at your bank. If you want to get rid of the banksters and you want to get rid of gotcha capitalism and you want to get rid of all those crappy entities that are middlemen that just leech off of the GDP of the economy and get in the middle of everyone's transactions and prevent you from doing what you want to do with your own money and are never open when you need them to be open. If you want to get rid of those people, someone has to develop the software that replaces every single product they have with a peer-to-peer trusted auditable solution. Bitcoin can do currency. It cannot do dime deposits. It already has time locking built into it, and it cannot pay interest when you lock up. It just screws you. It just makes it so you can't use your own money. You don't get any reward for it. You don't receive any interest for it. If you want to make interest on your Bitcoin, you have to lend them to someone, hope they lend them out, and hope you ever see them again with a return. And that gets hacked and shut down all the time. People lose tons of Bitcoin trying to make a little extra Bitcoin on their Bitcoin. So we invented trustless interest. We invented the first high interest internet blockchain certificate of deposit, which is called Bond in the UK, time deposit across Asia, guaranteed GIS in Canada. Guaranteed, I don't even remember what it stands for. Something investment security certificate. I don't know. GIS. So if you want these coins and you want this world-changing innovation and you want to get in at the beginning, like I got in at the beginning of Bitcoin, I got my Bitcoin for free, and now you guys will buy them for $8,000, the ones that I got for free by just double-clicking an EXE, right? I'm recreating that for everyone, giving everyone opportunity to get in at the beginning of something amazing again. And I'm giving it to you guys for free if you're a Bitcoin holder. Snapshots in 5 days and some hours. It's on December 2nd at 0000 UTC time. So it's amazing. It attacks a larger market than Bitcoin does. Currency is a smaller market than cash time deposits. Time deposits are 7.2 trillion in the United States and China alone. And we have lower fees than Bitcoin. And we have, I believe, better security because Ethereum that we run on has a bug bounty program. And we've had 3 audits, of which 2 are security audits and 1 is an economics audit. So it's like, and our consensus code is locked into a smart contract that no one can edit. It's immutable. And therefore it's very, very hard to have bugs around consensus, but in Bitcoin, if you improve the network stack, you accidentally introduce a mint as many free coins as you want bug. And they've had 2 of them. One of them was executed and they had to roll the chain back. The other was narrowly avoided because a Bitcoin Cash developer reported it responsibly instead of using it for himself. This was about a year ago.
Yeah.
So I hear people saying Bitcoin is more secure than Ethereum. And I have a strong laugh because Ethereum's never had an inflation bug. Never. And Bitcoin's had 2. And Ethereum launched or is primarily used by 5 of the top 10 market cap cryptocurrencies. USDT used to do its transactions on Bitcoin. It moved most of them off of there onto ERC20 on Ethereum, which is the same format that we use. That coin does more transaction volume than any other coin in crypto, period. So the only people that are really using crypto are the USDT guys, and they're primarily doing it on ERC20 on Ethereum. EOS, BNB, TRX, USDT, and Ethereum themselves all are in the Ethereum ecosystem. They launched there, they started there, or they primarily use it now. So anyone that talks to me about security and says that there's some kind of problem, dreaming. So they're going to say, oh, they're going to say the parity multi-sig hack. You're like, yeah, they didn't declare a function as private. And if they would have wrote the word private in the contract instead of defaults to public, they wouldn't have had that problem. But since they didn't write the word private, they got hacked. Does it have anything to do with Ethereum? Nope. They used it improperly. What about the DAO? Well, Bitcoin rolled back the chain once because of a bug. Ethereum never rolled back the chain because of a bug. They removed a hacker from being able to steal some people's money because the community decided that's what they wanted to do. Not because they had to, because they wanted to. And could they do it again? Nope. Why not? Because if they could, they'd roll back the chain for Polkadot and Parity, who are, Gavin Wood's projects, and he wrote Solidity, right? He wrote the smart language code, the smart language that everyone uses in Ethereum. He wrote that. If they're not going to roll back the chain for him, they're not going to roll back for anybody. Yeah. So I'm very, very happy with the ecosystem.
So in terms of the incentives, because what I try to do on my channel, my channel is called Hack Crypto, and the concept is hack your crypto education. And I try to simplify everything I possibly can. So if you were going to simplify down like the incentive structure for viewers and listeners and whatnot, I've been interested in masternodes and things like that because the incentives are really interesting to people all over the world. What's the incentive structure for the CD? Is it that you hold it there for a year, 2 years? What are the milestones that people would be holding it on there to get their interest?
Well, if you free claim, you're 90% auto staked for 350-day minimum. And if you like up to 3x the shares as a bonus, you can increase your stake length. And at 36-41 days, you're going to have 3x the shares. Now, the share price only goes up. Every time someone ends their share, the system looks and says, are you the highest return on investment anyone's ever seen? If so, your ratio becomes the new price. So if you made a 10x in your Bitcoin profit or in your Hex profit, you're going to get the new share price to be set to 10x what it started at. And so now if you tried to get back in and like recompound, you'll never have more shares than you originally had, ever. It's impossible. So this is mathematically equivalent to compounding the interest for earlier guys, but it's computationally more efficient because we don't have to write a bunch of data to a bunch of different fields across a bunch of different entities. We just change one share price, and then instead of amplifying what the earlier guys had, we just reduce what the newer guy gets. And since they're just measuring ratios of all these people to divide up all the profit inputs to the stakers class, it works great. It works wonderfully, and it gives us a wonderful chart of a share price that only goes up. Now, that is not the USD price. It may affect the USD price because it introduces scarcity, but it is not directly related to the USD price at all, right? So the USD price, I'm quite sure, will go up and down because it is a function of humans pressing buttons, and you can't program humans to press buttons the way you want them to, right? So you can create scarcity in a system programmatically. So sometimes we'll say program to pump because there's a nice alliteration in there with the two P's. But in reality, the price will be, in a free market, the price is set by the market participants, and they could create bubbles, they could create flash crashes, they could do all those things if there's human control. That's why I like the smart contract. The smart contract doesn't have an order book to screw you. It doesn't have flash crashes. It doesn't have wicks to stop you out and get you liquidated. None of those things. So with trustless interest, you can make high interest just sitting and holding Hex, and the contract holds it for you. And it's like getting free electricity and free mining hardware. It just prints all the inflation of the system to you. But in Bitcoin, see, Hex stakers get paid to hold the price up. Bitcoin miners get paid to sell the price down because they got electricity bills to pay. They got new equipment to buy. They got facilities to pay the rent for, right? We don't have any of that in Hex. No miner is paid an inflation reward in Hex. The only miners that get paid in Hex are a couple pennies at fees, or you can mine your own blocks, which is harder. I would imagine most people will pay someone else to run the software for them.
Mm-hmm. And what do you think about the new ability to actually stake with, I think it was 30 ETH or what they're going to have for their nodes, right?
You'll lose money on it.
You
So
think
just
so?
do a search. You can go into t.me/hex crypto and type !Casper, and you'll see Vitalik's presentation called "So You Want to Be a Casper Validator." It just goes through all the ways you can lose all your money. It's not easy. It's an actual job. You have to you have to have good hardware. You have to be connected to the internet always, and your consensus code has to always arrive at what it should, or you'll lose money. You'll be slashed. So it's risky, and it's low profit margin, if any. Some people will lose money, I think. And that's not what I'm in crypto for. I'm not in crypto to bust my ass and work really hard to make mediocre gains. I'm in it for the mad gains. That's what I'm used to. That's what other people are getting, and that's what I want. So I have no interest in being a Casper validator whatsoever.
Got it. So running back real quick, what originally got you into Bitcoin? Like you said that you were mining. Mm-hmm. What was it that got you into mining it? Like what was that?
I was addicted to video games, and I loved overclocking my GPUs and having, the best hardware at the time, because I'd been retired since 2003. Just traveling the world, just screwing around. Blew a decade of my life doing that. And I was on this website called overclock.net, and I'd already heard of Bitcoin before on Reddit. Once before it was $1, and then once when some guy sold his house to buy it at $1. And then, everyone was writing guides on how to do GPU mining on overclock.net. And so then I got into the Bitcoin forum, and it was an IRC channel. And, there was a guy in there named Art Fours, and he wrote basically the first GPU miner. And, I got to chat with him, and I got set up GPU mining. And if you're not playing a game, you just double click the Bitcoin exe and money starts appearing in your computer. Seemed like a no-brainer to me. So I liked it. And then I ramped up and bought more machines and had a little server farm. And then I bought with USD. So they get you in with the free stuff, and then you all in. And that's what Hex is doing too. So, I've got a referral link if you want 10% more. It's pumpamentals.com. It gives you 10% bonus when you claim, or 10% bonus when you send Ethereum to the contract to transform it into Hex. We get people in with the free, world-changing innovation. Feels to me like buying Bitcoin at $1 is the environment, the vibe that I get. And then I think people will buy in. I went and made a Twitter poll, and I should do this by email too. I'll probably send something similar by email. I said, listen, an anonymous donor is going to give you 10,000 Hex if you can predict what the ratio will be from the bottom, the low that gets set the first day that this trades, which should be the first day it exists, which would be December 4th. So snapshots December 2nd, adoption amplifier lobby entries open December 3rd, and then people can exit the lobbies with their Hex and free claim their Hex on the 4th. And then the staking starts. So on the 4th, we should have markets that open, Ether Delta and Fork Delta, where people can trade. And then, IDEX reached out and said they wanted to list. Another exchange, actually a couple exchanges said they wanted to list. I'll promote them when I see it on paper that they've done the work for me to name drop them. No, the ratio between the low set that day and the high 183 days later. Whoever guesses that ratio is going to get 10,000 Hex. And the numbers that people are guessing are 420x, 1600x, 10x, 0.05x, right? There's a large range of numbers there that people are guessing. And from what I see, they seem to be quite high. So the data that I have to try and predict what this price will do and how many people are interested in it are how many emails do we have from signups on the website? They're not even signups. It's just optional email list signup. You don't have to give your email address at all, right? It's just, if you want to stay up to date, it's just a way that you can help be notified. We've got 18,750 on there. We've got, and I think maybe we'll only get 1 out of 10 or 1 out of 100. Let's say 1 out of 10 or 1 out of 20 visitors actually gives that email. Wish I could do better math. So we've got 18,500, and we've had 300,000 plus users on the website this month. So that's what, 1 out of 15 or something, right? So there's probably, my guess, maybe 200,000, 400,000 people interested. That's a lot of people. There's a lot of people. And these are people with Proton mail addresses that are more anonymous. And I don't think they want to be giving up their email address that easily, right?
Yeah.
Because people in crypto don't really like giving out personal info. So I think people are really interested in this. I think they believe that it's going to show them a high return on investment due to its excellent design. And this is with me promising no entrepreneurial effort whatsoever. We've never spent $1 on marketing. I tell you very specifically that any money that you send to the contract in the form of Ethereum, you must expect absolutely no benefit from whatsoever, because of the Howey test, right? Howey test says if people give money to a common pool with the expectation of profit solely from the work of others, then it's a security and it has to get licensed and it has to get registered and it can't list on exchanges because exchanges don't have broker-dealer licenses. So if you want this currency to list on an exchange, it can't be a security. And if it can't be a security, it helps not to be a security for you to have no expectations of anyone else doing any work for you. And so I push that idea very, very hard, that no one else is going to be doing anything for you. You're the one that mints your own coins. When you, just like Bitcoin, when a Bitcoin miner mints his coins, he mints them for himself. No one gives them to him. Hex is the same way. You mint your own coins. You are the network. No one's doing more work than you are. I can't mint your reward. Only you can do it. Only you have your private keys. When you stake your coins, they actually get burnt. And then when it's time to end your stake, you mint your own principal back and you mint your own reward. It's awesome. It's very, very innovative and cool system.
So in terms of just like a brief dive into the game theory of it, there's a concept in game theory called Shapely where if you and I, both produce a certain amount, like let's say you produce 10 cookies, I produce 20, but together we streamline it, we make 40 together, but then I leave, how much do each of us make? Like we average the amount. So if I come in with, let's say 100,000 Bitcoin and start on Hex, and then I leave, like I leave, does anyone in the Hex ecosystem that has their CD, do they benefit or do they?
So it works the same way Bitcoin mining does. So first of all, once a snapshot has occurred, you can sell your Bitcoin for Ethereum and then put them in the adoption amplifier and transform them into Hex. There's absolutely no relationship to the Bitcoin network whatsoever after the snapshot. Nothing.
Got it. Okay.
So you will never stake your Bitcoin in the system. The only thing you'll ever stake is Hex. Now in Bitcoin, it has always inflated. It's always inflated a lot because it went from 0 coins to 18 million coins. And the only way you can go from 0 to 18 million over 10 years is to print a lot of coins. And any coin that anyone has ever purchased passed through the hands of a miner. So people think that Bitcoin is like a peer-to-peer currency, but it's actually not. It's a peer-to-miner currency. And if you don't mine, you're not actually a peer and you don't get any free coins. So the miners in Bitcoin are an elevated status, and apparently they're all Chinese now because they don't talk to you on Twitter. I don't know a single Bitcoin miner, not one. And I know a lot of people. And I've never seen a single Bitcoin miner post on Twitter. Okay, well, why? Because they can't access Twitter in China. They have to use a VPN. It's blocked, just like YouTube's blocked, just like Telegram's blocked. So there's a huge mining centralization problem in SHA-256 mining. And I like Hex making it so those guys don't get paid more than they need to. They get the fees that they need and nothing more. Because when you overpay them, they just sell the price down. And they're currently overpaid. And it's a protection racket. Who are you protecting yourself from? Them. Because they're the only other people that could attack you with SHA-256. They're the only people that have the hardware. So you're paying a protection racket. You're paying these guys, 12.5 times 8,000. You're paying them like $100,000 every 10 minutes to not attack their own network. Okay. Well, $100,000 every 10 minutes is kind of a lot of money, isn't it? Right? And what do they do with it? They sell it to pollute the environment, to pay electricity bills, because that's a security model. Proof of work, it works, but man, it's not exactly the most efficient thing, right? It's like colorful feathers on birds. Yeah, it works, but there has to be other ways, right? So if you want to get something for free, like I got my Bitcoin for free, you have that opportunity here. If you want to transform Ethereum into Hex, you're not going to get your Ethereum back, but you're probably going to end up with a lot more Hex, like a ton.
Yeah, because I know you brought up proof of work, and that was pretty much the entire reason why I came into the space, because I was obsessed with the labor theory of value, where, if we go out hunting and I catch a rabbit, it took me 2 days to catch the rabbit, and I catch
You're a
a
bad
deer.
hunter if it takes you 2 days to hunt the rabbit, bro.
and it takes me 1 to get a deer. I'm going to charge more for the rabbit because it took me more labor to get the rabbit. So
you can try to charge more for it, but I don't think the market would allow you to charge more for a rabbit than a deer.
Yeah, well, the market definitely would dictate. The market definitely would take control. But in terms of what got me into the space originally was the concept of proof of work. It was this new version of the labor theory, and I think
it's just information signaling theory that animals have done forever. So the reason that deer grow larger and larger antlers is because it's a waste of calories. And if they could survive wasting the calories, then they obviously have an excess. And then they could use that excess to benefit their mate. In certain countries, younger people get into the habit of pouring champagne down the drain just to show how much money they have.
Do you find there to be value though? In of course you do, because you were in Bitcoin early on with proof of work. And I love proof of stake as well.
Proof of work is just a means to an end. It's not actually good or great. It's just the only thing we have that works right now. So what we care about is censorship resistance. And proof of work and decentralization are means to that end of censorship resistance. But if we could get censorship resistance in more efficient ways, we should do that. Because polluting the environment, it's not actually that good, right? And so I like proof of work. I use proof of work. And I hope that some of these other solutions to create trustless systems with censorship resistance without the pollution exist. I hope that occurs.
So what about
it probably will, truthfully, because people fantasize that there's all these attacks that we have to prevent. There's not. The majority of attacks that we have to prevent are software bugs. And there's no one working on that because they're stupid. They're idiots, right? The only bugs we've really had, no one's working on stopping. I've stopped this alarm or it's going to keep going. Sorry, guys.
Yeah, the concept of proof of work, I think, given the current financial structure,
I'm back. It's a good thing I wear pants for these interviews.
Not going to wear pants for the interviews.
You there?
Yeah, I'm here. So what I was going to say is that the current financial structure, like the whole financial space, we'll call it, banks and things, they survive very heavily on transactions. So what do you think of a future where proof of work is basically banks are mining Bitcoin and surviving off of those transactions? What do you think about that?
That's the stupidest fucking thing I've ever heard.
You don't think so? Because they
that is
currently
retarded.
survive.
That is the dumbest thing I've ever heard of in my entire life. No,
it was actually suggested on Bitcoin Talk years ago. They suggested that as like a potential for them to participate in the future, where they're confirming transactions, making their transactional fees.
Yeah.
You don't think banks will do that in the future?
No, I don't. I don't think that at all. And they haven't. Hey guys, we want to displace the banks and get rid of them. God, I hope they sell our coins and stay in business. What? I thought we were here to get rid of the shitty banks. That was the game, right? Let's get rid of these assholes. They're just taking everyone's money and being mean about it. So now we want to onboard them as miners and beg them to process our transactions and allow them into blocks. You fucking kidding me? There's the shittiest possible Bitcoin miner in the entire fucking universe would be a bank. There ain't no possible way they're ever doing that, ever. And you don't want them to. That's a stupid idea on so many levels.
So you can't stop them though, right? It's open source.
Yes, you can, because they have fucking laws regarding AML, KYC, and suspicious activity reports and financial transmission licenses and shit. They don't want to deal with any of that at all. They have problems keeping their own fucking websites up. You think they want to run some other bullshit where they got to argue about signaling for which fork they're going to support? They don't want anything to fucking do with any of that. And there's no goddamn money in it. Miners lose money. How are you going to onboard a bank to become a miner when miners are losing money? Doesn't make any sense.
So do you not see a future where banks get involved in crypto? They just vanish. They don't adapt. They just die instead.
What bank has anything to do with crypto? There's 4 or 5 fucking banks on like the planet in the Western speaking kind of G8 nation planet that will onboard a crypto user and be happy about it. There's 4 or 5 banks you can go to if you're an exchange and hope that they don't shut you off. 4 or 5, and this shit's existed for 10 years. They ain't mining, and you'll be lucky if they even let you keep your account open because you're just risk for them. You're not a profit center. You don't have that many users. You don't do that much volume. You're just someone that they're going to get a letter from the regulator saying, oh, I heard somebody from Al-Qaeda use Bitcoin, and I heard you're into Bitcoin, so we're going to look into you now. Get your auditors ready, bro, because you're cash negative. The amount of money that you spend for your auditors to look up the paperwork to report that you did everything right is going to exceed any profit you ever made on these customers. Oh, and you're personally responsible, by the way, because of the transport rule. What's that rule where you have to know the customer of the bank that you're sending the money to? The travel rule, right? This is the dumbest line of questioning I've ever heard. Banks do not like crypto. They don't want to work with crypto. There's no money for them in crypto. It's only risk for them, which is the reason there's only 4 or 5 of them that will work with any crypto company in the entire world. And we don't like them, and we don't want to work with them. So, like, get rid of the banks. What do? What do they actually do? They're just a software company. They're just a really shitty, really slow software company, right? People don't even use them for like exchanging currency. They use local exchange places, right? Like TravelX. But like, fuck banks. Nobody likes banks.
Yeah, I agree. I mean, when I was doing peer-to-peer lending, we got shut down multiple times from bank accounts. Like,
you know what's up. Yeah, they make it a nightmare. You're like, why'd you shut us down? I can't tell you.
Yeah.
Okay. Do I have any recourse? No. Okay. So just fuck myself then? Yeah. Just fuck yourself. Yeah. All right. I'll go get the weapon of ass destruction and get to work.
Yeah. But the hard part was like you said, there was no explanation. They'd freeze funds, things like that. But right. When I was doing peer-to-peer lending, a really cool startup that I met called BTC Jam. I don't know if you remember them, but they were doing peer-to-peer Bitcoin lending, and in South America.
Can you explain to me why the fuck anyone would borrow a Bitcoin? Do you know how goddamn stupid that is? Let me explain to you how stupid borrowing a Bitcoin is. Okay, you borrow a Bitcoin in 2016 at $200. You hold that shit for a year. 2 years maybe. Now you owe a $20,000 Bitcoin back. When you borrow Bitcoin, you're fucking shorting Bitcoin. Do you want to short Bitcoin? Are you fucking stupid? Like, borrowing Bitcoin has to be the dumbest thing anyone could ever possibly do in their entire life. Because if the price goes up 10x, which it very often does, you now owe 10x the fucking money. Why would you ever borrow Bitcoin? You have to be stupid.
So what do you think of borrowing against it with US dollars or dollars in some way?
That's different. Then you're fucking like, borrowing a Bitcoin and borrowing a dollar are fucking different. The dollar's not going up in 10x value this year. The dollar's not going up like usually at all. Usually it goes down in value, right? Because they keep printing it.
Yeah.
Bitcoin becomes more scarce over time, not less. People lose their keys. The halvening happens. The rate of issuance cuts in half. If you borrow Bitcoin, you're just shooting yourself in the head. Like, you're going to owe the amount of money that you might have to pay back could be 100x more than you borrowed. Who the fuck wants to do that? Like,
I do think that the new concept that all these lenders are coming out now and trying to, I could send 100 Bitcoin to them and then borrow against it, similar to like taking a HELOC out on a house, treating it as an asset.
Sure, that's fine. It's a perhaps it's a tax deferral regime.
Yeah.
Perhaps it's, deferring accruing gains, like depending on what jurisdiction you're in, perhaps it's making it so you don't have to go to a bank and you might live in a country where the banks are assholes, right? It could be any of those things, but none of those things are borrowing a Bitcoin. All of those things are borrowing dollars against your Bitcoin as collateral. And furthermore, I think all those things mostly suck too, because Bitcoin and crypto was created to get rid of counterparties. And now you're turning the exchanges and these new DeFi centralized bullshits, CeFi, centralized finance, you're creating the new banks out of these people. The banks that we hate now got their start with gold as a hard currency and then handing out paper and fractional reserve on top of it. And now people are doing the same thing with Bitcoin. Bitcoin's a hard currency, and then let's layer on all this Rube Goldberg bullshit on top of it to suck money out of the customers' pockets and risk their privacy and risk their security and add extra counterparties where there weren't any. That's not what crypto was designed for. Crypto was designed to get rid of those people. So we should be using smart contracts and distributed finance to get rid of all of that crap. So if, like in Hex, you mint your own coins, you mint your own rewards, your counterparty is yourself. You're the one running the smart contract. You're the one running the code. You are your own counterparty. There's no order book to fill. There's no like other person that you have to like, hey, I want to buy. Does anyone want to sell? Hey, I want to sell. Does anyone want to buy? Can I find a counterparty here? Oh, something went wrong. Can I sue BitGo now? Right? None of that shit. We built something better. Furthermore, you were asking, if someone locks up a bunch and then they unlock, does that benefit everyone else? Yes, because you're all sharing the same profit inputs, right? So the system inflates a maximum of 3.69% after the first year. And there's early end stake penalties and late end stake penalties. And those are the three profit inputs to the stakers. And it's divided by shares. If you get it earlier at a lower share, you're going to have a much larger portion of that than if you got later in at a higher share price, where you had to lock up more Hex to get the same amount of the share, right?
Got it.
And then if someone ends their stake, well, now you're getting more. If everybody ends their stake, it would be just like being the only Bitcoin miner. So in Hex, we're monetizing time, and in Bitcoin, they monetize hash rate. So we're the first cryptocurrency that monetizes time, just like banks do in the real world, just like vesting periods do. Well, that vesting periods is more the auto stake, but so in Bitcoin, new coins are given to people that mine more with hash rate, and in Hex, more coins are given to people that got in earlier, larger, or longer.
Got it. So there is a marginal contribution of individual users. So when they actually got it,
they lock in their Hex. Yeah.
Interesting. Yeah.
It's virtual lending. So people go, hey, in a bank, people lend out your money. Actually, no, they don't. It goes on the liability side of their asset book, not on the asset side of their ledger. And they just use that as an excuse to get free money from the Fed. Your money doesn't actually get lent out. And in our system, we have virtual lending. When you're a staker, you're virtually lending value to the coins that are not staked. And then anyone holding those unstaked coins is receiving that value. Because reduced supply with static or increasing demand means higher price. So there's a value transfer there, right? You can't sell your coins, so this guy can sell his coins for more.
Got it.
Virtual lending.
So will there be
pump, virtual lending, trustless interest? If you're given programmable money, the first program should be interest. Stake it till you make it. We got a lot of slogans.
I like the Pumpamentals domain.
Pumpamentals.
That's pretty rad.
Maximalish.
So will there be like a secondary market? Will people create?
Sure.
Are you guys going to create that? Do you think other people will?
I'm not doing anything. I'm doing nothing. Don't expect anything from me. Remember the Howey test?
Yeah.
Okay. I would assume that like any other useful thing, free markets will exist. We already know that it's going to list on Ether Delta and Fork Delta on day one because anyone can add it there. That's the power of being in the right ecosystem of distributed finance. You can't build on top of Bitcoin. You can build on top of Ethereum. And then everything plugs in with you and everyone can build on top of you. If someone wants to wrap a Hex contract and make staked tokens able to trade, they can do that. If someone wants to add margin to Hex contracts and let you like borrow extra Hex to lock up more, they could do that. If someone wants to allow you to use Hex as collateral for a loan, we can do that all trustlessly, all with smart contracts, all with atomic swaps, all in the same network, no oracles. Awesome. Real distributed finance. If you try and build on Bitcoin, you're building on AOL. If you build on Ethereum currently, you're building on the actual internet of distributed finance. It's awesome. It's really, really cool. And like, what else? Yes, I'm psyched. You should watch the video I just made last night while I was falling asleep. I made a 10-minute video and just walked through, here's how you send Ethereum to the contract. Here's how you end your stake. Here's how you start your stake. I just walked through everything in the user interface. And I'll do another one later tonight. And then you'll be able to see everything, right? Like it's time. You'll be able to start staking December 4th. You'll be able to enter the adoption amplifier with Ethereum December 3rd. You'll be able to free claim December 4th. Snapshots December 2nd. 0000 UTC for all of this. So we're all of this awesome strategizing and theorizing and simulating of what we think will happen. You know, you could simulate your gains on stakehex.com. There's a simulator where you can choose different worlds and say, this is how many people are going to claim, and this is how much they're going to stake, and then how much gains would I make, right? You can do all that. Somebody else made a spreadsheet that shows you, you know, how much hex you would get per ETH based on your guess of how much ETH is going to go on day one. So we know day one is going to be about 1 billion. Well, it's definitely going to be 1 billion hex. And then day two is going to be around 500 million. And then that number is going to keep going down as people claim. So the more people that claim, the less are available to the adoption amplifier. And everyone's got their target, their eyes on this day 353, when we pay all the unclaimed coins, plus all the late penalties, plus the Goxby nut, where Mt. Gox can't claim, plus the multi-sig can't claim. About 2/3 of Bitcoin supply is unlikely to be able to claim. And that is all going to get given to the stakers after being multiplied by adoption bonuses, up to 3x for virality, which is how many people claimed of the possible total, and critical mass, which is how many people claimed of the possible total coins, right? So claim events and coin mass. So your payout on day 353 is going to be pretty gigantic. Now you could say, well, hey, why don't I just stake at day 352 and then I would be ready for day 353 and earn all that. Sure, you could do that, but what's the share price going to be then? 5x higher, 10x higher, 20x higher, right? And then you're going to get 20x less share. And then the people that stake 3x longer are going to get 3 times the lower price, right? So they got in a lower price, compounding their advantage against you. And then they also stake longer, compounding their advantage against you. I guess you could cancel out the longer because you could stake longer from that point right before the day 353 payout too, right? And then people misunderstand this. They go, well, isn't the price going to dump right after day 53? Well, not from the auto stakers, it's not, because those claims happen over a year, and then their minimum auto stakes end over a year. So the last of the minimum auto stake guys that claimed on day 350, he's going to end up ending his claim on day 701, right? Mm-hmm. So, and if a bunch of stakers decide that they want to be able to end their claim right after day 353, you're going to see it because it's public. Now, if you see everyone's ending their stake on the same day, is that the day you want to end your stake? Probably not. So we're the first cryptocurrency in the world with a chart of future market supply. Now, when I say chart, devs are working on a chart. You might have to make your own chart. You might have to go into Etherscan and just look at all the transactions and make your own chart. So my devs are working on it, but you know, me telling you that any work will occur will 100% not happen as we get closer to the launch date, right? So I need you to understand that there will be no work. Hopefully that this chart is pretty and done before launch, but if not, someone else can build it, right? It's not that hard. This data is all public.
One of the things that happened with peer-to-peer lending within the first 2 years of it kind of gaining popularity with Lending Club, Prosper, all those peer-to-peer loan platforms, was it originated with mom and pops being able to lend money, right, to somebody that wanted to consolidate debt, credit card debt, whatever it was for a personal loan. It very quickly became banks creating bots that were just scraping these loans and making the loans all of the tier one.
But that's more efficient.
Low risk.
I don't see the downside to that. That's more efficient.
It pushed mom and pops out from getting actual return on their quality loans. So it quickly
and it gave everyone else a lower rate.
In terms of the bank came in, scooped all of the quality loans out, and then it became more the pure actual retail investors were getting the lower quality loans. So
yeah, well, look, man, if the government keeps handing out free money, you're always going to have this problem. Like the savers in an economy where money is given away for free by the government, the savers will always be fucked, and the people trying to hunt yield will always be fucked. And the businesses will always take all the money. So free borrowable cash amplifies the returns of businesses because they can deploy it to purchase goods and purchase business infrastructure, which returns yield over time. Whereas the lenders that don't have such an opportunity, like Ma and Pa that's retired, they just get destroyed because they're not trying to start a business. They're trying to survive. And what they use to survive a lot of the time is CDs. My grandparents survived using CD ladders, where you would have a CD and then you'd always have one CD ending when you needed money. And that's how they survived until they died. Mm-hmm. So, when the government's printing the money for free, savers are always going to get fucked and businesses are always going to do wonderfully. And that's why you see, retired people having the worst time of their lives, not being able to pay their bills because prices keep going up, but they can't make any interest at all. And businesses are at all-time highs with the S&P 500 at all-time highs. And you're going to continue to see that as long as interest rates are artificially low, period.
So in theory, like you were saying, banks aren't going to be involved in anything in this, but businesses could come into Hex and just start lending to people and kind of bring the coalition.
No, this is not one of those ecosystems where you have an order book that has lenders and borrowers and you're trying to order match them and you're worrying about an order matching engine. This is not that. This is you versus the contract and them versus the contract. So you can stake or end stake, you can stake long, you can stake short, right? Unless you're a free claimer, and then there's that minimum 350 day. And there's also no emergency end staking for you. But, for normal coins, they can emergency end stake, like, adoption amplifier coins. So you don't have to worry about someone on the other side of the transaction ever, because your counterparty that pays you the interest is the smart contract that invented the currency in the first place. So you are your own counterparty. You're the one running the software. There's no one that does that make sense to you?
Yeah, I was referring to the secondary market stuff that we were talking about earlier, where people
if people want to. So I'll give an example for a contract someone can make. In our system, to prevent people from spamming the blockchain with extra transactions, we reward you for consolidating your stake into a larger stake. It's called bigger pays better. And they do this in the normal world in banks with a jumbo CD. So if you have a jumbo CD, it pays about 10% more interest. And if you stake for longer, you make about 20% more interest per an extra year. That's the math as it stands today. We copied those things and we put them in our system. If you stake longer, you get about 20% more interest per year in the form of shares in our system. And if you stake bigger, you can get up to about 10% more shares. Now, because bigger pays better, someone could create a contract that maxes out its bigger pays better bonus and then sublets other little guys to jump in underneath him. And they share that increased yield, right? So that could exist. That's something that could exist on top. And it could be totally decentralized with a smart contract. It doesn't need to be centralized. But if someone wants to do it centralized, they could. Like a lot of exchanges do that now because there's other coins that you can stake. And those staking coins don't have the time lockup system that we have. They don't emulate CDs. They don't value time. We value time. We monetize time. So I would imagine other exchanges, if other centralized exchanges are very likely to become stakers in the system if they hold a pool of people's funds, I think.
Yeah. No, that makes sense. I mean, just like what we were getting at with the businesses getting involved and things like that, I think that exchanges make sense. Similar to what happened with EOS and the block producers, where exchanges with huge bags of EOS just became the biggest block producers. I think there's Bitfinex, OKX, and some of the Qcoin and a couple of the bigger ones became these massive stakers because they just have tons of EOS on the exchange that they're making money off of. Mm-hmm. So in theory, if somebody
their system pays out 1% per year.
EOS.
Yeah. And I think the Ethereum Casper stuff is also under 4%, but you have insanely high costs in order to try and earn that. So I don't consider either of those staking systems anywhere near competitive to what ours pays.
Are you familiar with Icon? With their
I've heard of them, but I don't know anything about them.
Yeah, they moved into a DPoS type situation now, mm-hmm. where they have 22 P reps, public representatives that are, mm-hmm. Helping with governance and whatnot. So it's kind of like a digital nation. So you vote on proposals and whatnot.
I love it when stupid people vote on things because everything ends up to work out so much better. Let's get unqualified bag holders to vote on things. Hey, you had money and bought something, so obviously you can make good technical decisions. No? So stupid. Well, it's distributed. You're giving someone else your stake. Okay, whatever. Look, I'm okay with security trade-offs, right? If people want to have less security for more throughput, cool. If people want to have less security for more convenience, cool. As long as you know that's what you're doing, right? Yeah, digital ledger technology products are garbage. They shouldn't pump because they don't require large liquidity to go into the systems to utilize the increases in efficiency, right? So if you build a better Excel, people aren't going to pay $1 billion in some token to use your better Excel, right? If you build some better thing, right? Like cryptocurrencies are only useful for censorship resistance and getting economic mass for people that want to make more speculation. It's irrational for people to invest a lot of money in a cryptocurrency that they can get all the benefits from with investing a smaller amount of money, right? So take a stable coin, for instance, right? Here's the US dollar, which goes down in value all the time. Now we're going to make a virtual copy of that with extra counterparty risk, and you don't get any interest whatsoever on it, and you can't sue the bank. And it's the most popular cryptocurrency in the world. Most transactions, most on-chain volume, or most trade volume. What? I don't get it. I don't understand it. But that's what the market wants. All right, I guess I'm stupid. The market wants it. So be it, right? Like there's some things that I didn't understand ICOs when they happened either. It's like, all right, these are the wrong guys doing the wrong thing with the wrong incentives. They have no product market fit. They'll never get any users, not even one. So give them $1 billion. That makes sense. Why not? Like, so drives me crazy.
So in terms of like from a technical perspective, would like my mom be able to participate, or is she actually going to need some sort of technical background in order to start the staking process?
Well, I made a 1 and 24-second long video that shows you how to import your keys, which you probably don't have to do, depending what kind of wallet you use. If you use Electrum, your keys are already in there. If you use Trezor, your keys are already in there. You don't have to import anything. You don't have to even look at your private keys ever, right? And then you just do your free claim, do your stake. It takes a minute. So if you know how to copy and paste, and you know how to go to a website, you know how to install a browser extension called MetaMask, you're done. Like that's all you need. You need internet access, a browser, the MetaMask extension, and you're done. Now, if you want to free claim, you also need a Bitcoin wallet because you're only able to free claim from Bitcoin wallet. I suggest Electrum. Mycelium if you're on Android, and Koinomi if you're on Apple iPhone. In that order. And then you go to the website, you go to go.hex.win, which isn't up yet. It's not public yet. You can see the video on t.me/hex videos. Or t.me/hex crypto. You can watch this 10-minute long video where I go through everything very slowly. Or you can go to youtube.com/hex crypto and watch the 1 and 24-second video, which doesn't have the adoption amplifier in it, but has free claiming, staking, importing your keys, which you probably don't need to do. So basically, if your mom can get a browser, install MetaMask, and buy Ethereum from somewhere, then she can get in and stake and use the adoption amplifier and everything. If she finds Ether Delta and Fork Delta, then she could buy Hex from somebody else that did those things, right?
Yeah. Well, it is interesting all of the incentives that you've added in there. I mean, I like the marginal contribution piece. I like the coalition of pretty much everybody in there. It's kind of like a cooperative effort. It sounds like everybody wants to monetize time towards it. So it is interesting. I'm definitely going to check it out.
Well, we've got so many volunteers. It's crazy. Like they translate the videos into Chinese. They set up Chinese WeChat. They make memes and videos and set up interviews. And our community of volunteers is pretty awesome. Like really neat, really good people. We all believe in the project, and we all want to see it do great things. And I'm in other chat rooms, and I see how much activity there is in other things, and I'm very, very proud with where we are. When Ethereum launched, Vitalik wasn't as popular as I am, and didn't have as many good things going for it, right? Like we're lucky to stand on the backs of giants that have built so many awesome things. I mean, even Bitcoin actually came through and did something awesome. So Bitcoin recently added a feature that can actually pull out snapshots directly from the blockchain. So you can actually like pull out the UTXO set from the blockchain using a hidden RPC call. And that didn't exist a year ago, but it exists now. Well, that's great because I just happened to need to pull out the UTXO set. So instead of having to do something that took about 8 hours before, it can take about 5 minutes. Well, that's awesome because the ecosystem got better, right? And there's, MetaMask supports hardware wallets like Ledger and Trezor. Electrum supports hardware wallets like Ledger and Trezor. I don't have to do anything, right? So now my project supports Ledger and Trezor on the Ethereum and BTC side because the ecosystem got better, right? So like there's so many awesome new things that exist now that didn't exist when some of these other things launched. I'm super psyched about it.
And since you're into Ethereum now, like I'm super bullish on NFTs and ERC 721s and things like that. Just given
what's an NFT? Non-fungible token.
Yeah.
So,
all
right.
The project I'm working on now, Grow Your Base, basically lets people collect digital assets, like digital tokenized assets, and also like crypto collectibles and things like that.
Right.
And in terms of your thoughts on actual collectibles on Ethereum and the idea you don't like crypto collectibles.
No, I hate them.
What about tokenized assets in terms of like,
that's fine. That's okay, but you don't need a blockchain because no one's trying to censor it. It's also stupid.
Interesting.
It's wasteful and inefficient. If like none of those projects, like you're spamming up the blockchain, you don't need censorship resistance. Creating digital scarcity for pictures of cats is horrible. If you like the cat you see, take a screenshot of it. Stop trying to dream that shit's worth money, right? It's dumb and it's not even good art. It's low tier, shit tier art. Like procedurally generated worlds are garbage for games. Real developers making real narratives with beginnings and ends is the top tier. And so I don't like any of those things. I don't like non-fungible tokens. I don't like ERC 721. It's not as secure. It hasn't been as battle hardened. The only successful use case spammed up the blockchain and fucked everyone with fees for a terrible, shitty casual game where cats permuted on top of each other with shitty graphics. Like,
so what about
like
given your interest in gaming, like you mentioned before with overclock and whatnot, the play to own concept where people are actually playing games with these collectibles in the games and they share revenue.
You're getting kids addicted to gambling. Congrats. You might as well open loot boxes and make 10x more money this year. You want to make money addicting kids to some fucking gambling? Do a loot box play. Then you'll make $1 billion this year. You want to try and do crypto, fake, this isn't a loot box, but we're trying to still kind of make the same kind of money kind of thing. Loot boxes is going to outperform you.
So blockchain gaming, you don't agree with blockchain gaming?
No, it's terrible. Do you need censorship resistance? Are people trying to censor your game transactions? No? Then why are you doing something slower and expensive and shittier with no track record of success? When you could just do something for cheaper in a centralized database, just like EA Sports does, or just like what's the name of that game? Counter-terrorist win.
Counter-Strike.
Thank you. I was going to say Sukabilat, but I could go through a list of good memes. It's like, or you could sell hats like Team Fortress 2, which I think that's better. That's a better model. At least there's some creativity involved there. Listen, I've actually got another call that I have to do, so I have to wrap this up. Do you want to talk about your stuff? Yeah,
sure. If you guys are interested in learning more, Google Grow Your Base, check it out. Also, I'm on YouTube at Hack Crypto. Talk about everything around simplifying some of these concepts with game theory and just using my background in economics to try and figure out crypto economics around all these different projects out there. But if you guys are watching on my channel, Richard, where can people learn more about Hex?
Sure. So I love being me because everyone in the world calls me a scammer because they hate that I'm building something better than what they've got. It makes them very angry. So I don't have any way you could possibly give me money. I don't have a shopping cart where you can give me a credit card. I don't have a crypto address where you can send me crypto. And it's been this way for years. No, I've never had any of those things ever since I've had the name Richard Hart. So I give everything away for free. I wrote self-help books in t.me/scivive. They're awesome. Check them out. I've got free crypto trading chat, which you should never trade, but if you're forced to and you just can't take my good advice, there you go. t.me/Strape charts. General crypto chat, Strape. Hex crypto. t.me/hex crypto. Follow it on Twitter, twitter.com/hex crypto. Got 100K followers across YouTube and Twitter. Richard Hart on YouTube and Richard Hart Win on Twitter. If you want to donate money to charity and they accept crypto, go to sens.org. What else? So free books, free tokens, go to pumpamentals.com. If you want a 10% bonus on free claiming or sending Ethereum to the adoption amplifier to turn it to Hex, go to hex.win if you don't want the extra 10% bonus, hex.win. So free tokens, free books, free chat, free videos, everything's free. It was good talking to you, man. I'm sorry that I had to do this, just an hour, but usually I would talk to you for a few.
Yeah, it was a good conversation. I liked it.
Good talking to you, man.
All right, man.
Yeah, so anytime you want to do another one, you just let me know.
Yeah. Happy to. It'll be fun.
Pleasure.
That is it for my interview with Richard Hart. It was a lot of fun sitting down with him. I'm going to try and do another one at some point in 2020 just to get an update on his project Hex. Also giving you guys an update on Grow Your Base and where we're at. So that is it for this episode. If you liked it, don't forget to slap a like. It helps the channel a lot. And don't forget to subscribe to Hack Your Crypto Education. And I will see you on the next episode of Hack Crypto.